Well, hello there. This is Slopinski. Slopinski Homes, Downers Grove with Bat Properties. And today we're having another conversation, a real estate and mortgage update with mortgage banker Keith Hoffman. How you doing today, Keith?
Wonderful. Absolutely fantastic. It's beautiful weather out here, and how can you beat it?
You can't. It was we had a lot of hot weather around here, and today cooled off a little bit, so it's a nice little break, isn't it?
Well, I'm going to remember this in December when we're up to our yin-yangs with snow.
Yeah. We'll all be wishing for that 90-degree weather.
Yeah, no kidding.
Yeah.
That's funny.
So, Keith, I've had a couple of interviews with you this past year. I don't know, 3, 4.
Yeah.
However, those who have not seen you before, I want you to introduce yourself, tell them a little bit about you and your business.
Sure. My name's Keith Hoffman. I'm a residential lending vice president at Draper and Kramer Mortgage Corp. Basically, what I do is originate loans. Been doing this for 30 years. I just May 1st was 30 years. So it's been a really good time. Draper and Kramer is a fantastic company. We're hitting highs as far as volume goes, like many other companies, but it's been very good, very good.
Awesome. And it's very interesting. You know, you're talking about you're reaching highs in a period where even when I talk to some people about real estate, they're surprised how well it has done this year with all that's been going on since March.
Well, what have you seen as far as volume and pricing and so forth?
Yeah, great question. And I'm going to show you a couple slides in a second. But one of the things that really surprised me in the last couple months, I've had more multiple offer situations, deals with either buyers or sellers in those few months that I have had in any one full single year in the past. It is just, it's incredible. I think a lot of the driving points behind that are the low interest rates right now for buyers, and there's not enough homes on the market.
Yeah, I've seen that before, and now I'm seeing it a lot lately. I've pre-approved many people, and they've wanted to come in with their offers as high as possible because of that reason. So it's good from the standpoint of the sellers, and it's also good for the interest rates for the buyers, but they seem to have to come up with some kind of a happy medium for the two of them.
Oh, I agree. And let's take a quick moment here, Keith, to share a few graphs here with our audience. Do you see that right now?
I do.
All right. So this is for the ending at the end of June. And this is how many homes went under contract. This is Downers Grove. Downers Grove was up 21% over the previous year. Darien was up 88%. Homes under contract in June over the previous year. Westmont was up 9.7% over the previous year, and Woodridge was up 37% over the previous year. Now when we go here, one more, Lisle. Can't forget Lisle, which had a huge jump, 108% under contract over the previous year. But now homes for sale, Downers Grove, available homes for sale down 34.3% from the same time in 2019. Would we have Westmont was down 12%, Woodridge down 12%. Oh, and that is it. And we'll get out of here. So in the month of June, you can definitely see there was an imbalance with homes going under contract and homes coming on the market. And that
what's interesting, I'm sorry, but what's interesting is that Downers Grove was up that percentage, and the year before it was up 25%.
Mm-hmm.
So that's a real big, nice jump in the last 2 years for home prices in Downers Grove.
It is, and even with all that's going on in the news and health-wise, people are surprised when I tell them that home values in Downers Grove are not going down; they're actually on the increase overall.
Yep.
And if we I want to share some quick data here over the last 14 days that I wrote down. So this is in July, first 2 weeks in July. In Downers Grove, we had 49 go under contract. It's only 17 new homes. That's for single-family homes. Condos and townhomes, 6 went under contract with 0 new listings. Naperville, 100 through 32 went under contract, single family homes with only 48 new homes becoming available. And with condos and townhomes, 45% going under contract with only 2 new listings. Westmont, single family homes, 12 went under contract with 0 new homes coming available. And with condos and townhomes, 6 went under contract with only 3 new homes. And the last one, Darien, 13 went under contract in the last 2 weeks, single family homes with only 4 new listings. And 10 condos, townhomes went under contract with only 3 new listings. So,
You know, what I found, and this is typically year after year after year, when we come into July, many of the families have already purchased homes, closing in August sometime so that they could get the kids into school, at least for what that's worth in the past.
right.
I don't know if that's the case right now, but it's an interesting look at where the market is moving forward.
Oh, sure, absolutely. And you're absolutely right that usually that second week of July, the buying traffic actually in the past has slowed down significantly,
Yeah.
where you have fewer homes going under contract and you have a lot of inventory out there. This year it's different. There's a lot of buyers still out there looking for that home that hasn't become available yet. If I was a person that was interested in selling my home, I would be putting it on the market this year because I would have a really good chance of getting what I want out of it according to what the market dictates.
Yeah. Well, a lot of people are moving out of state. There's more and more relocations. People are moving out of state for better tax issues. So when you look at that, it's got to be a seller's market. I mean, it really does look good.
Mhm.
I've pre-approved a number of people, and they've put in contracts, and they haven't gotten them because everybody's there at the full price or going over the full price.
Right, exactly. I just had a home went on the market last Friday. By Sunday, we had 23 showings and 8 offers.
Wow.
Yeah.
Yeah, I wish I had my house in Downers I could sell again.
Right. Yeah. Yeah, that's interesting too, because I was looking at in Orchard Brook, and right now I think there's only like 3 or 4 homes available on the market in Orchard Brook.
Yeah.
So what are you seeing on your end as far as mortgages and loans, Keith? What are you seeing going on? What do you see? What are the challenges? What do you see coming up in the near and maybe distant future?
Well, everything has been absolutely chaotic. I mean, it really has. We've had more and more people refinancing because interest rates are so low. For instance, I just refinanced somebody from a 30-year that's been in it for 8 years. And so they have 22 years left, and they're going to take a 15-year at 2.5%. So, it really behooves somebody to look at the numbers, and that's why more and more people are doing this. In addition to that, people want to buy homes because once they have the ability to afford the home because of low interest rates, that really helps a lot. I've done a lot of pre-approvals. People are out looking for homes, and the refinance business is just off the charts. I mean, it really is good. Our company, to give you an idea, we did $3 billion last year in mortgages. This year, we've done $3.5 billion in 3 months.
Wow.
So, we're on track to do almost $1.8 billion this month. So we put on a lot of personnel. We've got a lot of underwriters. We just put on 8 new underwriters because, you really have to make sure that the flow goes through the system very easily. But, before it used to be like 30 days, no problem. You could do a mortgage, refinance, cash out, whatever it is. Now, I'm looking at taking more of the 60-day locks so that way I can make sure my customers are really, not going to blow through their rate locks.
Yeah,
So
yeah.
it's been a challenge.
So I got a question for you. After I'm done with this question, I want to talk appraisals. What would you say to somebody, since we're talking about refis, that maybe has 8 years left on their mortgage, they see the end in sight, maybe they're at 4%, and they're at the point where every payment is more towards the principal than it is towards the interest.
Right.
Would you suggest that they look into refinancing right now?
What I would do is I would contact me or the lender that you want to work with. We can amortize things for less than the time frame that you need to. So for instance, if it's an 8-year mortgage, we can do a 10-year note, but amortize it over 8 years so that they're not losing anything. And then of course, we'll look at the numbers to see what the principal and the interest is based on what you're paying now. Because obviously, if you're paying lower interest rate right now, you're probably going to be better off refinancing it, even though it's a small amount. It really depends on the the amount of money that you need to refinance.
Sure.
Because there is a cost to refinance, and unless you pay it up front, you're going to put it into the mortgage, and some people do that.
Mm-hmm. No, great advice.
Yeah.
So one of the challenges I've been seeing with some of the buyers, either mostly when I'm representing the sellers, is that most of the delay is around the appraisals right now. And I'm assuming that has a lot to do with all the refi going on. But several times, we've received notice from the lender saying, hey, the appraisal's been ordered. And it's a week later before the appraiser even contacts us to set up the appointment. And then instead of having that turnaround and getting the report to the buyers, within 4 days, it's 7 to 9 days. Are you seeing that on your end? Do you see an end to that? Are they making any kind of adjustments, putting more appraisers on, or what do you see?
Well, first of all, it's never good to blame part of our system, but the appraisals have been very difficult to deal with. I'm going to say they are probably taking at least 10 days. I don't think a lot of companies are going to put on appraisers. I think they're going to maintain what they have as far as number of employees. I think they're going to be working a lot more. Maybe they'll raise the price because of it, but I don't see that happening. But I do see the difficulty in the appraisals. One thing I was totally shocked, doing a refinance for somebody, and I ordered the appraisal literally in the morning, and I talked to him in the afternoon, and he said, the appraiser just left. And I just about fell off my chair. I go, are you sure that this is an appraiser that we sent out? And apparently the gentleman was in the area and decided he was just going to go and do the appraisal. So I got the appraisal in 3 days, where they don't even usually get out there in 10 days. So
Yeah,
it's kind of nice. It's an interesting.
That's a great story.
Yeah,
it's definitely, I know they're trying to adapt, because I've had several situations this year where the appraisals were either done, desktop or drive-by. I'm assuming to save time, or if they felt that just because of the condition of the home and the price was that, it was easier to evaluate, and it was not necessary to go out there.
Well, it's nice because right now, what we'll do is I'll run the automated system before I even send them an application, and I have all the information. I'll look at it to see what kind of findings we have. And a lot of times recently that we've had a number of property inspection waivers. And we don't have to do appraisals because the systems, Fannie, Freddie, they already know the values of the properties in the area. They've done enough mortgages, and they feel that it's okay. Now, I'm going to say this in regards to somebody who might not have great credit, might be putting a small amount down. Maybe you're not going to get the property inspection waiver, but they definitely go off of the purchase price, and they figure on exactly how much it is and what the comparables would be. In refinances, if we do a Fannie Mae, because of COVID, if we do a Fannie Mae loan refinance and they had a Fannie Mae loan before, a lot of times we'll just be able to do a drive-by. And the same thing with Freddie Mac. It's Freddie to Freddie, then they can do a drive-by. And it really depends on the situation, but they have definitely changed their situation from where they were in the past.
Yeah, great. So, as I mentioned, this year has been just kind of crazy, unexpected. Each week we don't know what we're going to expect to see. In the real estate market, I think the buyers are still out there. And if we have homes coming on the market, it's going to continue steady, maybe not as the peak of maybe a month and a half ago, but I think it's going to continue steady all the way through the end of the year if the interest rates stay around where they're at. And so where do you see the interest rates heading through the end of the year? I know you don't have a crystal ball.
You know, I was just looking for my crystal ball, and if you hold on 1 second, I'm going to get my crystal ball. And this crystal ball right here will tell you exactly what's going on. And what I found is that everything's sort of up in the air. Things are staying stable, but the problem is we're going to have an election in a couple of months, and that's going to usually throw a lot of turmoil or uncertainty into the market. So I'm anticipating, like most people, that this is going to be something that we see for a little while with low interest rates. But really, honestly, I wish I had this crystal ball with a little mortgage guy in it instead of the golf ball.
Yeah, we're going to have that election year, and that's not even going to be the same, most likely, as it has in the past. So,
oh, I'm sure. I mean, with COVID issues now, I mean, it's really been difficult. It's put a lot of turmoil into the markets. It's been personal issues. You know, we see Illinois is low, then all of a sudden, you know, Florida's low, then it spikes. Texas is low, it spikes. You know, I mean, it's a little more conservative now than it was. When it comes to the refinances, the title companies don't go in to the homes. They ring the doorbell, they put it on the step, they sign everything, then they bring it back out. And as you know, nobody can really go into closings, purchase closings. I mean, that's been really tough.
right. Yeah, that's something I'd miss because I've always made it a point to be at every single one of my clients' closings. Just to be there for support and to, if anything comes up, I always have everything in my Dropbox folders to, bring up if anything is needed. So it's been kind of weird for me as well.
Right.
Yeah,
one of the things that I really like to do, go to closings, is I like to bring my bottle of wine, my Hoffman Farms, to each of the customers. And that's been a real difficult thing for me to do because obviously we can't go to closings.
Right.
So, yeah, it's a little different than it was before.
Yeah, and I know your clients do appreciate that wine. So
it's delicious.
Yeah. I mean, just to wrap up, if I was a buyer looking to purchase, take advantage of this opportunity. If you feel comfortable in your financial situation and your current job and employment status, and the same thing if you're a seller, is if you're considering selling, this is really a good time to do so. Talk to a realtor to really know what's going on out there, how we're handling the showings with buyers. Everybody wearing a mask. We do use hand sanitizer, sanitizing wipes. When I'm with my buyers, I open up all the doors with sanitizing wipes. I don't let my clients touch anything. And so we make it as safe as possible, for the people who are selling their home. Again, if you're not comfortable with that, then maybe this isn't the right time. If you're looking to take advantage of an opportunity, I mean, this is it right now.
So you find it very difficult to have open houses? Do you still have open houses?
I do. We changed that up now, Keith, too, where we used to have a sign-in form with a piece of paper and a pen. Mm-hmm. Of course, we don't want to be having multiple people touching that paper, the pen. So I have a computer sign-in. Actually was generated by At Properties. It's really slick. I wipe down the keyboard with sanitizing wipes each time. If the people aren't comfortable with typing their information to register, I'll do it for them.
Sure.
And this way, less contact. We can allow people in the open house. We require everybody to have masks on and maintain a list, 6 feet away from, family groups.
That's great.
Yeah.
That's good.
So anything to wrap up, Keith?
Well, I the only thing I'd like to say is that, it's a great time, whether you're a seller or a buyer, to look into doing things. If you're thinking about renting, you could probably buy a place and pay lower amount of money, principal and interest, taxes, and insurance than you would be as a renter. So I would think the people that are considering renting might want to consider buying. There's great programs out there with 3% down, 5%, 3.5 FHA. So there's a couple of different things. And if you're a veteran, the VA loans are no money down.
Mm-hmm.
So it's a really good opportunity for people to buy right now. And I think they need to get pre-approved, talk to the lenders, and really go that route.
Sure, sure. Those VA loans are phenomenal. I had a couple of VA clients. They had plenty of money to put down, but they chose not to.
Right.
They said, why? It's they're available for them for the service they have provided, and then they can use that money that they have in the bank either for renovations or whatever else they need.
Well, it's a great benefit, and our military, whether you're Army, Navy, Marines, whatever, it's a great thank you to them, and I think it's a good way to go.
Yeah. Well, Keith, thank you again for a great conversation. As always, I know our viewers are going to get a lot out of this our meeting and our video chat right now in the real estate and mortgage industry update for this month. And if you, the viewer, have any questions on either the real estate, buying or selling, contact me. If you have any questions on lending or mortgage or refi, contact Keith Hoffman of Draper and Kramer. And of course, both our contact information is down below our screen right now. So this is Slop Polinsky Homes. Make it a great day.